Welcome to another episode of The Unmediocre Mind. In this episode, we will dive into another field, which is business and finance. Today's topic is how Starbucks turning into a bank. This accomplishment reveals the importance of strategy and business innovation. Some of you may be aware that McDonald's, the world's largest fast food chain, is involved in the real estate industry and that Harvard and Stanford have their own hedge funds. You might feel a little perplexed if this is your first viewing. But trust me, the situation is perplexing. To compound the problem, Starbucks, the well-known coffee shop company, is beginning to resemble a bank. Yes, you heard it right, a bank, where you keep your money in your account. Watch the entire video to see exactly how Starbucks is similar to a bank. To be clear, Starbucks has never made any mention of its intentions to open a bank. Before we start, please do not hesitate to support our content by liking our videos and subscribing to our channel. The story of Starbucks. Jerry Baldwin, Zev Siegel, and Gordon Boker founded Starbucks with the assistance of Alfred Peet, who served as their mentor. In Seattle in 1971, Starbucks primarily sold coffee beans. Then comes Howard Schultz, who pushed the company's founders to appoint him as director of sales and marketing because he liked Starbucks. Then, while on a trip to Milan, Italy, Howard Schultz decided to turn Starbucks into a coffee shop as opposed to a supplier of coffee beans. But the company's founders weren't thrilled with the concept. The Starbucks we know today was founded when Howard and his investors bought Starbucks in the years 1985–1986. After opening about 140 shops in just 5 years, Starbucks filed the necessary paperwork to go public in 1992. Within just 2 years of the firm going public, the number of stores had already tripled thanks to Howard Schultz's ability to quicken his already speedy expansion plan. By 1996, Starbucks had launched its 1,000th location and made its debut in Japan as a global brand. With over 2,500 stores overall 3 years later, Starbucks had grown once more. The brand experience and consistency of the coffee throughout the shops, however, were adequately maintained despite all of this expansion. In 2000, Orrin Smith became the CEO and Howard Schultz promoted to chairman. At that time, company was operating roughly around 3,000 coffee stores. Under the new administration, Starbucks set a new vision for even faster growth. In the 7 years between 2000 and 2007, Starbucks amplified more than 4-folds. And during those 7 years, Starbucks established nearly 1,500 new shops each year. As a side note, Starbucks expanded to the point where the Frappuccino effect was observed. It was claimed that the price of the real estates were substantially increases in the neighborhoods where the Starbucks was present. All the rapid growth didn't happen smoothly. Starbucks encountered severe problems like the price fluctuation due to the problems occurred in Brazil and also stock market in 2008. But as a company, Starbucks never altered from their commitment and they overcame the severe crisis. The merge of Starbucks with the technology. Starbucks appointed its first chief technology officer and introduced the Starbucks loyalty card with great forethought. Starbucks eventually released its own app, which is now remarkably responsible for 30% of the company's overall revenues, thanks to the increasing emphasis on digital. The food and restaurant industries have been changed by these loyalty programs today. These loyalty programs make it simple for users to earn points toward free drinks, meals, or discounts. By 2021, you'll be able to add funds to your Starbucks account instead of paying with cash or a credit card. You can pay via the phone app. Customers have no hesitation in storing part of their money in their Starbucks account since they know they'll utilize it eventually due to the company's size and reputation for customer loyalty. 41% of US and Canadian clients pay with their Starbucks cards. The users kept around $1.5 billion in the Starbucks account at the end of 2019. $1.5 billion might not sound like a remarkable amount, but it's substantial when you consider that more than 3,900 banks across the U.S. possess less than $1 billion in total assets, according to the FDIC. Starbucks clients in America are holding nearly $1.2 billion in cards and apps. This amount is greater than the cash kept by the client's bank, which is $780 million, and Green Dot held $560 million. Starbucks still has a long way to attain PayPal, which accumulated over $13 billion on its client accounts across the globe. Starbucks and banks are similar but different. Customers unintentionally give Starbucks a $1.5 billion loan with 0% interest while acknowledging that they will eventually exchange their cash for coffee. Starbucks may invest this money in the market to generate free profits or utilize it to fund business growth. It's even better than it seems. About 10% of this money will be forgotten or misplaced and never be used. This is called breakage in the industry. According to its annual report, Starbucks reported a breakage income of $125 million in FY 2019, $155.9 million in FY 2018, and $104.6 million in FY 2017. However, Starbucks is technically not a bank. A few exceptions are there. The balance cannot be withdrawn as cash like a genuine bank. And only coffee is applicable to the withdrawal system. By this way, it is not subject to financial regulations and keep the cash however it likes. In a typical bank, clients who deposit money can withdraw it whenever they choose. Therefore, banks must maintain some cash on hand to distribute to customers who request withdrawals. This refers to fractional reserve banking. But Starbucks doesn't have to maintain any amount of money in case of massive withdrawals, since that money only returns to the customers by coffee. This means Starbucks can liquidate new businesses, brands, and projects. The CEO of the third largest financial group in South Korea stated that Starbucks is an unregulated bank, not a mere coffee company. We are also not able to predict the next strategy that will be executed by Starbucks, but it is apparent this coffee establishment is open to contemporary business and innovation. As a result, it's not a novel concept for a large firm to enter the financial services sector. But if Starbucks were to take this action, the future of banking would be entirely different. We appreciate you tuning in to our episode. Keep checking back for more fascinating subjects.